Hey, it is Troy Stavros. Just a quick follow-up video from a post that I made yesterday. And that post was this one here that basically was talking about what interest rates did yesterday. They jumped up to 7.72% for a 30-year. And basically the post just said, affordability was already brutal. This doesn't help. Inventory is keeping prices high, but interest rates are crushing demand. And that is just so true. And I'm going to show you that visually in a second about what it is doing to demand. It also went on to say that there's so few homes available for sale that demand's exceeding supply in desirable areas. If we had a normal amount of supply, home prices would be dropping like a rock. And that's just basically supply and demand and how that works. But the fact that over 85% of homeowners have locked in an interest rate below 5%, and many are below 3 and 4%, that is deterring them from listing their homes and in turn keeping inventory low. It is a crazy situation. That it is. Then it talked about how inventory in Farragut has risen 47% since May. So we are seeing the cause of interest rates allowing more inventory to come on the market because, again, it is crushing demand. People are having trouble affording the payment on a loan with prices so high, especially in Farragut where home prices, the median home price is $635,000. But that being said, we only have 2.23 months of inventory in Farragut. In Knoxville as a whole, it is much less than that. It's just right around 1 month's worth of inventory. So even less inventory in the Knoxville market as a whole. Also in Farragut, we've seen the median list price, new median list price, and the sold median list price trend lower. We're also seeing those effects in Knoxville as a whole as well. They're not going down dramatically or drastically, but they're either staying level to coming down a little bit lower. But some of that has to do with seasonality as well. But buyers are definitely being more picky and taking their time to find what they want. If they're going to have to pay so much for their mortgage payment, you can rest assured they are going to find something that they are willing to pay that much a month for. So they want it to be right. So homes that are fixer-uppers, unless they are really priced aggressively, a lot of them are just definitely staying on the market longer. So, and I go on to say that if your home isn't a home run, you should be pricing it aggressively in this rate market. And it's a totally different market than last year when money was cheap. And then I just go on to give this example. If we take today's median price home in Farragut of $635,000 with a 20% down payment and compare that to the monthly payment on principal and interest between last year's 4% rate and today's 7.72% rate, it's an additional $1,200 per month in the payment. So exact same amount of mortgage, exact same down payment, only difference is last year it was 4% rate. This year, right now as of yesterday, 7.72. And what is the difference in the monthly mortgage payment? $1,200 per month. So there you go. And I wanted to go and show you just kind of what it is doing. This was an article that came out today in Mortgage News Daily talking about mortgage rates continue to climb. Mortgage applications took their biggest hit since mid-April. The Mortgage Bankers Association, in its Market Composite Index, which is a measure of application volume, 6% down, both seasonally adjusted and unadjusted from last week. So it's down 6% from last week. Refinance Index dropped 7% since last week. And you can imagine refinances. Who wants to refinance into a 7.72% rate? I mean, I would be surprised if anyone has a rate higher than that they would want to refinance into that. But some people are doing cash out refinances because they need the money because of inflation. But if we take a look historically, this is the refinance index compared to the 30-year loan, right? Look how low it is here. And this is historically dating back, this is back through 2014. So it's never been as low as it's been right now. And then when we look at the purchase index, this is people that are putting in applications for mortgages to buy a home, you can see what has happened since interest rates started taking off. This was in May. So if we look here in May, all the way till now, well, actually this was through September 28th as far as this graph went. But in that amount of time, this is what demand has done. It has just fell off a cliff. And now you look back from now, there has been no time between now and 2014 where purchase demand has been as low as it has been right now. And this was through September 28th when rates were 7.31%. And today, right now, they are at 7.74% as of October 4th. So there you go. I hope that that is helpful, just kind of showing you what these interest rates are doing to demand, what is happening to demand in the market. Again, the only reason we are seeing prices stay where they are is because inventory is so low, but we don't see a big wave of inventory coming from anywhere because of those homeowners locked in to their low interest rates. Don't see why they would want to get rid of that low interest rate to get into a higher one. So a lot of the things that we are seeing happening now are happening with cash. So cash buyers can definitely come into this market and buy, but people that have to get a mortgage, 30-year or 15-year, even the 15-year is over 7% right now. So I hope this has been educational. If you have any questions about the market, feel free to reach out to me. I hope you are having a great day, and we will talk to you soon.